Good morning and welcome to Financial Accounting. As always, we'll start with looking at our calendar to talk about what's due. So if you recall, last class, did I not change the date? This should have been changed. I changed it in two other places. So change that. So as you know, last class we did not finish up chapter 2, and so I had included in the announcement and changed the date in Cengage. So the chapter 2 exercises are due today. I apologize that I apparently did not change that in the Blackboard calendar. But so we will be looking at exercises 9 and 10 as we get started today, and then we'll finish up chapter 2. I also said last class, though, we had covered everything you needed for the chapter 2 problem. And so the only thing that changed was the due date for the exercises. So exercises and problem for chapter 2 should be submitted for grading by the end of the day today. If you have any questions about that or need more time, that's always okay. They don't close on you in Cengage, but you're really better off to stay on track as much as possible. And then once we finish up these final 2 exercises for chapter 2, we will be starting chapter 3 today. So the chapter 3 pre-quiz should be submitted for grading by the end of the day as well. You can probably get this by now, that we're in chapter 3 weeks into the semester. But you need to score a 60% or higher on that quiz to get credit for it. You can answer the questions an unlimited amount of times before you hit submit for grading, and just make sure you're keeping an eye on your score so that you don't submit it for grading with a score less than 60% because you get no credit for that. We'll be covering chapter 3 today and Wednesday, and fingers crossed we will finish up the chapter on Wednesday and be back on schedule. Chapter 3 then is the final chapter for our first exam. So next week, we'll be talking about what's on that exam, how the exams work. I'll actually open the exam and show it to you. We'll talk about it during class just so that there aren't any surprises. It's not intended to be a surprise. So we'll finish chapter 3 presumably on Wednesday, but if necessary, it could transfer over to next Monday. That still gives us time to finish up the chapter and submit everything for those first 3 chapters and be ready to take the exam that following weekend. All right. So any questions about that or anything else? Well, let's go to our exercises then. And our first exercise for today is exercise 9. And exercise 9 deals with the trial balance. So we've talked about a trial balance already. We've seen what the trial balance looks like. We're going to be constructing our own trial balance here in part A. So we talked about last class the order in which those accounts should appear in the trial balance. And it's the same order they would appear in the chart of accounts. So it's always the same order they are in the expanded accounting equation: assets, liabilities, stockholders' equity, dividends, revenues, expenses. It's always in that order. Within the assets, they should be listed from most to least liquid. So we're always starting with cash and ending with the assets that we expect to have around for a longer period of time, such as property, plant, and equipment. Liabilities are typically listed in the order that they're going to come due, roughly. So what we have here is 9 separate T accounts, and you can see we've already been recording transactions in those. I believe those actually match up with the transactions we had looked at in a previous exercise, possibly. Not? Thought so. Yep, there they are. So in exercise 5 last week, we went through each one of these transactions, matching up the debits and the credits, and talking about, I don't have it saved because I'm not able to save in this, but you have it saved, talking about which accounts were debited and credited and what impact that had as we learned about normal balances and which side to use to increase the accounts and so on. So in exercise 9, we're looking at those same transactions that we've already discussed, what happened in each one of those transactions. So we're not going to be doing that today. Our job today is to prepare an unadjusted trial balance. And I remember saying last week, I don't know why they throw in that word unadjusted. I think that can be confusing at this stage because we don't know what adjustments are yet. However, that's the title of our next chapter, the adjusting process. And so I guess they throw in that term just to kind of give you, an early preview, early warning that this is the preliminary, and after what we learn in chapter 3, we'll have more of a finalized version. So as you can imagine, unadjusted means that there is an adjusted trial balance after we finish the adjustments. So the accounts have been adjusted, and that's what we'll be doing next. If you look at these T accounts, if you read down each column, so if you start here in the first column and read down and then down the third column, the accounts are already in that correct order that we discussed. So assets from most to least liquid, cash, accounts receivable, supplies, equipment. Then liabilities, accounts payable. Then our equity accounts, common stock, and retained earnings if there was a retained earnings account. We don't have one yet because this is a brand new company. They hadn't made any money yet before this month of operations. It tells us right here it's its first month of operations. So that's why you don't see a retained earnings account after common stock as you normally would. Then we have dividends and revenue and expenses. The expenses are all lumped together. We talked about that last week. That's really just for classroom purposes. Summarizing entries, we would have separate accounts for wages and utilities and anything else we would be paying for. So on our unadjusted trial balance, you'll notice that it has the same 3-line heading formatting that we've been talking about since chapter 1. We have the name of the company, the name of the statement or report, and then the date or range of dates that it covers. So this trial balance is a snapshot as of a specific time. We're going to be listing the accounts in that order that we've just been discussing. And it's the same order that we have up here in the T accounts, as long as you read down each column. So I'm just going to go ahead and put in the account titles already. And then our job is to find the balance for each one of these accounts. So we have a series of transactions, as we discussed before. Really, the only one that has lots of transactions in there is the cash account. I'm going to ask you to balance that on your own. I'm going to pause the video and let you do that on your own. So remember, to balance the account, we add up the debits to find the debit footing. We add up the credits to find the credit footing. We subtract the smaller from the larger and record it on the side that has the larger footing, the larger balance. So I'm going to pause the recording to allow you to find the balance in the cash account, and then please restart the recording. So as I added up the debits, we had put $53,100 into that account. We had used $22,675 from that account. And so what we had left in the cash account at the end of the month was $30,425. That is a debit balance. So I'm going to come down here to the trial balance and record that in the debit column. And remember, we said last week that the trial balance is a report. It's not a financial statement. On financial statements, we do not have debit and credit columns. We don't indicate debit and credit on a financial statement. In order to read a financial statement, you don't need to know anything about debits and credits. That's how we can tell. One way we can tell this is a report. because it is important that we have the debit and credit balances in the correct column. Because as we said last class, the whole point of the trial balance is to show that our total debits are equal to our total credits, or to prove that our system is in balance. For the rest of the accounts then, we have at most 2 transactions. And so balancing these is going to be much simpler. If you have a debit and a credit, you're simply going to subtract. If you have 2 debits, as we do for operating expenses, you're going to add those together. Obviously, some of the accounts, equipment, dividends, revenue, have just 1 entry. So I'm going to, again, pause the recording and let you bring those balances down into the trial balance. Once you have all of the debits and credits in, so you have a balance for every account, go ahead and add the columns, and you should find that your total debits and credits are equal. Again, I'm going to pause the recording and let you fill in the rest of the trial balance, including the totals, before you restart the recording. And so once I entered all of those accounts in the correct order, assets, liabilities, equity, dividends, revenues, expenses, put the balance in from the T accounts on the proper debit or credit side, and added up the total debits and credits. Now, for whatever reason, this book chooses not to put dollar signs in a trial balance. I would suggest that they normally are there. Where you would put them is one at the top of each column. So the first number, show you. So normally you would have a dollar sign here by the first number, here by the first number. Whoops. And then you'd have a dollar sign here for the totals as well. And I'm not sure why the book chooses not to do that, but I have seen that, and it tends to be pretty consistent that it doesn't use dollar signs in a trial balance, but I would say that's kind of unusual. So we should have equal dollars, debits, and credits. If you don't, then what do? Well, you're going to want to go back and start checking. First, check to make sure that each account has the balance in the proper column, the column that you would expect. So if we just go down the assets, they're all in the debit column, liabilities and equity and revenue in the credit column, dividends and expenses in the debit column. So they're all where we would expect them to be. If you find one that's in what seems like it's not the right column, you'd want to go back to the T accounts and make sure that it was that you'd calculated the balance correctly. Could be an addition, subtraction error. It could be a transposition where you've just copied the number wrong. So there's really no magic way of finding your error. There are a couple tricks that work if you have just one error. Like if you've left an account off, the balance is going to be out of balance. The debits and credit totals are going to be out of balance by that amount. If you put it in the wrong column, it's going to be off by twice that amount. And we talked about that last week when we talked about how to correct an error. If you have an error in the journal entry, we saw that it would be off by twice as much if you put the number in the wrong column, debit or credit. If the amount they're off is divisible by 9, it likely is a transposition error. So you've put 2 numbers in the wrong order. So rather than putting 1,800 for this one, maybe you put 1,080. That would make the error off by a number that's divisible by 9. Those tricks, though, only work if you have just one error. So my first suggestion is just be super careful as you're doing this in the first place, because it's a lot easier to take your time and do it right the first time than to go back and try to find your error, because there's no way about it other than just check one line at a time, one account at a time. In the real world, though, virtually every company in 2022 uses computerized accounting information software. And so you're not actually constructing them by hand like this. You're just literally hitting the print button, print trial balance as of this date. So we do them by hand in class so that you understand what it is that's happening. Same thing we talked about last class when we posted in the one account, we put the one exercise we posted by hand. And I said, that's the only time we're doing this, just so that you can see what's happening. But in reality, the software does those things for you. Last part of this exercise, based upon the unadjusted trial balance, determine the net income or net loss. So I would just like to remind you what we talked about. Put a line right through there. So on your trial balance, just like in the fundamental accounting equation, we can neatly draw a line between the permanent accounts and the temporary accounts. And so above that red line are the balance sheet accounts. Below the line are the temporary accounts, including dividends, revenue, and expenses. So to look at this and calculate our net income is fairly straightforward, because we know that the revenue and expenses that we need to calculate net income are right there at the bottom of the trial balance. We had revenue of $20,500 and expenses of $8,375. So the difference would be our net income, $12,125. Makes it simpler for us because of the order that we have the accounts in the trial balance, and that will always be the case. Dividends, revenues, and expenses are always going to be the final accounts. And we talked about in an earlier class why dividends are not included as part of the operating expenses, why they are not considered part of our income, and they are actually paid with after-tax income from the corporation. So go ahead and hit the check my work button if you haven't already done that, to get all of your green check marks in there. And because you do have those open cells that don't have anything in them, because it did tell us, you don't have to, you can just leave it blank if it doesn't require an entry. I would also recommend that you just take a look at your assignment score and make sure you got the full 10% for that exercise. Any questions about how to make a trial balance, what the purpose of the trial balance is, just to show that the debits and credits are equal? We spent quite a bit of time last week talking about why some errors don't show up in the trial balance. The only errors that will show up or be detected is when we have a transaction that we enter that the debits and credits were not equal. So putting in the wrong amount, as long as we put it on both sides, putting in the wrong accounts, leaving an entry out, putting an entry in twice, none of those errors will show up in the trial balance. The only type that shows up is if we have unequal debits and credits. All right, let's move on to our final exercise for this chapter then. And again, we are seeing all of the same T accounts that we had from exercise 5 and then just now in exercise 9. What we are doing in this exercise is writing journal entries. So I'm going to go in Blackboard to the reference materials folder and remind you that we have this page of information, this little set here of information, required form for a journal entry. And this is what we are going to be doing in this final exercise. Remember, the journal entry is how information gets into our accounting records. And so we need to make sure that the information there is complete and correct. Every journal entry is going to have a date. Now, sometimes in class, we don't have actual dates that we're working with, but we would have something to indicate the timing. So sometimes we have seen the use of letters, or in this exercise, we are using the numbers to represent the date. But if this was a real transaction, we would know the actual date, June 1st or June 10th or whatever. In addition to the date, we need to have at least 2 account titles. We've talked about double entry accounting several times now. We know that every transaction must affect at least 2 accounts. You need to name those 2 or more accounts. The debited ones are always listed first, followed by the credited ones. And the credited ones, as you can see here, are indented. Okay, so debited accounts followed by credited accounts. And we saw last class that the software usually guides us in, if there's more than one debit or more than one credit, it guides us into the order it wants us to put them. There is no correct order within the debits or within the credits. You can't put them in the wrong order in a real world situation, but the software needs us to put them in a specific order so that it can tell if we're doing it right. So it guides us by not necessarily giving us all of the options in every blank, in every space. And then we have the dollar amounts to be debited and credited in the correct columns, and the totals need to be equal. So even if it's a compound transaction where we have more than just 2 accounts, if there are multiple debits, we need to add them. If there are multiple credits, we need to add them and then compare the totals to make sure that they are equal. Most of our transactions are what we call simple transactions. There's just 2 accounts, 1 debit, 1 credit, and no addition necessary to make sure they match. So let's get started with our journal entries. So what we are looking for, we're just going to go through them. There are 9 separate transactions. We're going to be matching up. Normally we'd be looking for dates, but in this exercise, again, we're using the numbers. So we start with the number 1. We can see a debit. A debit here for 40,000 and a credit here for 40,000. So we need to journalize that transaction, a debit to cash and a credit to common stock. The 1, the number, takes the place of the date. As we already pointed out, that would be a date. We list the debited account first, followed by the credited account, and then the dollar amount in the correct boxes. Again, we want to leave the other boxes that we don't need. We want to just leave those blank. There should not be anything in those. Everybody okay with that? Does that make sense? Okay. Let's do one more together and then I'll pause and let people do the rest on your own, but I do want to let you do those during class since the exercises should be submitted today. And the other one I want to do together is number 3, because that is the compound transaction as we saw last class. So we have here a debit of 15,000 and there's a credit of 10,000, but here's the other credit for 5,000. Okay, so 15,000 in 1 debit and then 2 credits, 5 and 10,000, obviously totaling 15,000. So we're going to have, this is the only compound transaction that we have. The debit was to equipment and the credits were to cash and accounts payable. So you'll notice when I check the first one, there's no cash on that drop-down list. It forces us to put them in the correct order, not correct, in the order that it expects. And as we discussed last class, what happened here? Well, they bought some equipment valued at $15,000. They made a down payment of $5,000, and then they bought the rest or paid for the rest on credit. They have an agreement that they'll pay for it later. And we saw a transaction later on, right here, transaction number 6, where they paid off part of that balance later on in the month. So everybody comfortable with what you're doing there? How to write a journal entry? Date, at least 2 accounts, debited accounts listed first, credited accounts are indented. You'll notice our software, I think this is really kind of cool. Our software is going to automatically indent those credited accounts as soon as you type a number in the credit box. It jumps the indent in there for you. So I'm going to hit pause on the recording again to give you time to finish up these exercises, the journal entries, and then use the check my work button, make sure you're good. And if you do have any questions when we come back together, you can ask those. Otherwise, we'll be ready to finish up chapter 2 and move on to chapter 3. Okay, so I now have all of the journal entries in. Dates, at least 2 accounts, 1 debited, 1 credited. All of the debits and credits are equal in total for each transaction. And as I explained in this chapter, as long as every transaction remains in balance with equal debits and credits, then your system as a whole will remain in balance as well. So that is the end of chapter 2. Unless anyone has any questions, I'm going to stop the recording here.